So a common investing mistake that I hear so many make is to say that my retirement date at year X, like maybe year 65 commonly, is what my investing goals should be aimed at in terms of time horizon. That's blatantly false. The real function is that unless there's something really untoward about a person, they're likely to live a lot longer than that. And they're going to need their investment funds, their retirement funds, to take care of them that whole time. And maybe they have other purposes as well, like leaving some inheritance to offspring or whatever. In that, the first and most important point is to figure out about how long that might be. So if you take normal kinds of data on how long people tend to live once they hit retirement age of 65, let's say, they tend to get into their 80s. And if there's two of you, married couple, for example, one of you could live shorter, one of you could live longer, but it's money really aimed for the purpose of the second to die, not the first to die. Then, two, it's also true that tied to a relatively steady stream of advances in medicine and other healthcare features, old people tend to keep getting older. And as you go through that period of going from 65 into your 80s, there's probably a few more years that go on after that. So one of the first things I always ask people is, how long do you expect to live? Because that's really what your time horizon is. And how do you figure that? You ask yourself questions like, how old were my parents when they died? And did they die of natural causes? Because that's a guide. And maybe you want to add a few years to that. And then maybe you want to take a step further and ask about, how old were your grandparents when they died? And did they die of natural causes? Now, if they died of unnatural causes, that's somewhat different. But these give you guideposts tied to your genetics, and then you move into your own individual health characteristics relative to others. Add a little, take a little away. But then I'd always add a little cushion on, because people tend to be surprised when they live a little longer than they think they should. And the reality is you need your money to last for you that long. It's brutal otherwise to run out of money in old age. And so moving, as so many do, to be conservative when they retire and move to like all bonds, which reduces your long-term total return, deprives you if you have that very long time horizon. So the simple point is you should aim for your time horizon, not your retirement date. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.